Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again at euro currency. Actual retracement that we talked about yesterday started. You can see how the market started preparation for payrolls report. Actually, guys, those who knows, I'm not sure, but it's a question whether there's massive firings by the Donald Trump of the government employees, government authorities. Will they already be in a common payrolls report standing in January, or we will see it later, maybe in February report. So this some intrigue exists. Supposedly it should be in February, it's just because the only offer has been made to retire. So lots of employees in the government authorities and some intelligence services, but I don't know exactly whether some firing were in January as well. So we will see. But actually today it's not the major question. I would say that most important information to us stand right now not on the euro currency but on the dollar index. On euro currency we see nothing really special. So as we said yesterday, we have this prediction. Some intraday targets have been achieved recently, and we said that we will be watching for a pullback. All the stuff stands in a row with a potential double repull pattern on the weekly chart. So we have two scenarios. I just remind you of the same things that we talked about in previous few sessions. So first scenario is do nothing and wait for a confirmation of the weekly pattern, and then after confirmation, if market will confirm this pattern, we will act accordingly. So if it will be confirmed, we will start watching for a long entry next week. And second, more aggressive approach is anticipation of this pattern. So try and take position a bit earlier, just because it provides a bit better price for entry and a bit smaller risk, but in terms of the money. But it's a bit higher risk that pattern may be not confirmed. And if you take a look at the dollar index here, we have very important things. So in fact, I'm speaking about these two grabbers that have been formed on the top. You do not see it on a euro currency. Actually, they are not exist there. But here it's quite obvious, and both of them suggest taking out of these lows. It means that within the nearest time, we should get deeper downside action and drop below this area, which is potentially supportive to the things that we suggest, right? So because we're talking about long entry. The same thing we see on the dollar, on the 10-year bonds. You can see that yield has dropped recently, as we suggest with this hand shoulders pattern. Now market is retesting the very long-term weekly trend line. This is the line of the broken huge weekly wedge. This has been broken recently. This is a very important moment that market should stay outside of it. But this is a different question. We will just keep an eye on this, and we control this moment, because if yield return back in this area, it means that we are going lower. What the action is, it's very difficult to say. This is obviously not the running in safety, because when the market running in safety, the yields are dropping together with the more demand for the dollar. But currently we do not see a rising of the dollar. Among the also having assets, we see a rising only of the gold market. Maybe this is some reassessment or evaluation of the possible results of the Donald Trump policy. For example, now ministers could suggest that they will slow down the economy in the United States because the overall mutual transactions will contract, and this might lead to some slowdown. And that correspondingly, the chilling of the economy suggests lower interest rates. So that might be also the reason for that. But we need to see more, because this might be just technical response, technical retracement. To get more information, we need to see what will happen around 4.30, 4.20 area. So whether the market will drop it down or not. For now, this is the most important thing that we have. Corresponding on euro currency, we're watching for the same levels. So as I said, let's keep watching for 103.50 in this case. We just slightly adjust this level. And also in euro currency, we could be watching for 50% support. This is favorite euro currency level, although I don't have it on this chart, but it stands approximately 103.20. So these two levels probably should be important to consider taking the position. As we suggested yesterday as well, so here might be kind of the hand and shoulders pattern or something. Market has completed the OP target, now it's dropping down. Let's see. So if you're a scalp trader, you would like to take the short position here, you could maybe follow this pattern if you would like to, although this is not our primary scenario. We're not considering taking shorts, but if you trade on very low time frames, you also could take it into consideration. So that being said, everything goes with the plan for now. We have a bit more confidence today with the grabbers that we see on the dollar index. Let's just patiently watch for support areas that we have predefined, this one and that one, and see what will happen there. So then we will make decision on a possible position taken. Of course, we do not want to see something like this, where this is just huge downside bearish candle. In this case, probably we will have to take this scenario on pause and just do nothing. But if overall pullback will be gradual, especially if we'll get kind of the A, B, C, D based on these hand shoulders, this will be okay. So we will be watching for these levels. That's all for now. See you next time.